All right, welcome back to the deep dive. Today, we're going to be taking a pretty fascinating look, I think, at the world of Indian venture capital.
Yeah.
And specifically, kind of looking back at all the trends that define 2024.
Right.
We've got some really interesting data you've shared with me.
Yeah.
And the headline that kind of immediately jumps out at me is, this big resurgence in VC funding in India, hitting $13.7 billion.
Yeah, it was a strong year.
Yeah. I mean, that's a substantial 1.4 times increase compared to the previous year.
Right. Yeah, I mean, what makes this rebound even more noteworthy is that it kind of happened while the rest of the Asia Pacific region was kind of, seeing pretty stable levels.
Right.
So this really kind of highlights India's, growing importance and its resilience as, the second largest destination for venture capital in the Asia Pacific.
Right. Yeah, second only to China at this point. Okay. So let's unpack some of these drivers behind this really impressive growth.
Yeah.
It wasn't just like a general upturn. There must have been some specific things that were at play.
For sure.
What were the key kind of engines fueling this resurgence?
Yeah, so I think there were several elements that kind of came together. First, you had some really strong underlying domestic economic fundamentals,
Right.
That provided a really solid base for all this investment activity.
Makes sense.
And then you had the positive impact of progressive regulatory adjustments.
All right.
So, for example, there were some measures aimed at streamlining tax processes for investors,
Right.
and that really kind of helped to boost market confidence.
Okay.
And then finally, you had the increased dynamism in the public markets.
Right.
Especially a really notable rise in IPOs.
Right. Yeah. A lot more companies going public this past year.
Exactly. And that offered a clear and really attractive route for investors to realize returns. It made venture capital a much more compelling asset class.
Yeah, that definitely paints a pretty clear picture. So with more capital flowing in, did we also see kind of a corresponding increase in just the sheer number of deals being made?
Yeah, absolutely.
Okay.
Yeah, so the data shows a pretty significant jump in deal volume.
Okay.
It rose from about 880 deals in 2023 to an impressive 12,270 in 2024.
Okay.
That's a pretty substantial increase.
Yeah, for sure.
What's really interesting though is that a big chunk of that growth came from the small and medium-sized deal segment. The deals under 50 million.
Okay.
That also saw about like a 1.4 times increase in volume.
Okay.
But it wasn't just the smaller deals.
Right.
The number of deals exceeding 50 million nearly doubled.
Oh, wow.
So indicating a renewed appetite for larger investments as well.
Yeah. So that kind of leads us to this really interesting part of the data. And this is where it gets a little counterintuitive, I think, for me at least. So the report points to an increase in megadeals.
Right.
So that's the 100 million and up deals.
Yeah.
But their average size actually decreased by 20%.
Right.
Which seems counterintuitive.
Yeah.
What's the underlying dynamic there? What's going on?
Yeah, that's a really insightful observation. I think what we're seeing here is kind of a market recalibration.
Okay.
So while investors were still willing to, deploy a significant amount of capital
Sure.
in large scale ventures, there was a clear trend toward more kind of grounded valuations. So both
Okay.
investors and founders appear to have kind of aligned on more realistic figures, perhaps, learning from some of the inflated valuations we saw in earlier periods.
Right. Yeah. Things got a little crazy
Okay.
with some of those valuations a couple of years back.
Exactly. I think there was a realization that, sustainable growth
Right.
and profitability were more important than just sheer scale at any cost.
Right.
So they were looking for more tangible metrics and a clearer path to revenue.
Makes a lot of sense.
But, despite this more cautious approach to mega deal valuations, we still saw the emergence of 5 new unicorns in 2024.
Oh, wow.
Compared to just 2 the year before.
Right.
So the appetite for backing potential market leaders, it remains strong. It's just that the average initial investment in those very large rounds was a bit more measured.
Right. Yeah. So it sounds like investors are still kind of swinging for the fences. They're just maybe not swinging quite as hard.
Exactly. They're being a bit more selective.
Yeah, makes sense. Okay, so we have a sense now of kind of where the money is going in terms of deal size, but
Yeah.
what about specific sectors? Which industries were kind of the primary magnets for investor capital in 2024?
Right. So I think the sectors that have traditionally attracted, significant funding, they continue to lead the way, but there were some notable shifts in emphasis.
Okay.
So consumer tech, software, and SaaS and fintech, those three collectively captured, over 60% of the total funding.
Okay.
However, consumer tech, it experienced a particularly strong resurgence,
Great.
witnessing a remarkable 2.3 times surge in funding to 5.4 billion.
Wow.
Yeah. So the significant growth was largely propelled by, substantial investments in areas like BDC commerce, travel tech, gaming, and ed tech.
Right. Yeah, so consumer tech making a strong comeback.
Yeah, absolutely.
That's definitely a key takeaway. And within that, the report specifically highlights quick commerce as a breakout theme. What made this particular segment so attractive to investors?
Yeah, I mean, I think what's fascinating here is, this confluence of rapid consumer adoption, right?
Yeah.
And the evolving maturity of the business models.
Yeah.
Within quick commerce,
Yeah.
consumers they quickly embraced the convenience.
Right.
And the leading players in this space, that they've been very agile in kind of refining their propositions.
Right.
Importantly, many of these companies began to demonstrate, tangible progress towards profitability,
Okay.
which really significantly bolstered, investor confidence in the long-term viability of the quick commerce model.
Yeah. So it's not just that it's growing really fast, but it actually looks like it could, make money.
Exactly. It's that combination of high growth and increasing, financial sustainability that made it a very compelling area, for investment.
Right. Okay, moving on to software and SaaS, including generative AI. That sector also saw growth, though, at a more moderate pace of 1.2 times.
Right.
But the specific mention of generative AI is particularly interesting, I think. What's the unique Indian perspective or focus in this rapidly evolving field?
Yeah. That's a great question. So the overall software and SaaS sector attracted about 1.7 billion,
Okay.
and within that, funding for generative AI ventures grew by about 1.5 times.
Okay.
What's really noteworthy is the kind of strategic focus here.
Right.
So globally, a significant portion of generative AI investment has gone into developing these foundational models, the core AI technology itself.
Right.
In India, however, the primary investment focus has been on applications and platforms that leverage these existing generative AI models. Right.
Great.
Right. Which makes strategic sense given India's, established strengths in software development. Right. And its, vast array of industries where AI can be applied to create, practical solutions. It's a more capital efficient and application oriented approach.
Right. So less about building the underlying AI from scratch.
Exactly.
And more about utilizing existing AI to create tangible value.
Right. Exactly.
Yeah. Seems like a pretty pragmatic approach.
It is.
Okay, so the report also highlights substantial funding growth in more what we might call quote-unquote traditional sectors.
Right.
Like BFSI, that's banking, financial services and insurance,
Yeah.
and consumer retail.
Right.
Which is maybe a little unexpected given, the dominant narrative around, everything being tech these days. What's driving this renewed investor interest in these spaces?
Yeah. Yeah, I think, if we connect this to the broader kind of economic landscape, India presents a massive and still largely underpenetrated market,
Right.
In these traditional sectors.
Huge population.
Exactly.
Lots of growth potential.
And then you have favorable socioeconomic trends, like a growing middle class and rising disposable income.
Right.
And that's creating strong and sustained demand.
Yeah.
So in BFSI, for instance, we saw, significant interest in non-banking financial companies that are focused on expanding access to credit and financial services in underserved, tier 2 and tier 3 cities,
Okay.
as well as in green financing initiative.
Okay.
In consumer retail, increasing discretionary spending and a demand for both, premium and innovative brands are fueling investment.
Okay.
So these sectors might not offer, the hyper growth potential
Right.
of some cutting edge tech areas.
Right.
But their fundamental market strength and potential for stable long-term growth are increasingly attractive to a wider range of investors.
Right. Makes sense. Large established markets with, significant growth potential
Exactly.
driven by, fundamental economic factors.
Right.
Yeah, that makes perfect sense. Okay, so now who were the investors providing all this capital?
Right.
Was it primarily, the usual venture capital firms, or did we see a diversification of the investor base in 2024?
Yeah, so the investor landscape in 2024, showed a positive trend towards greater diversity.
Okay.
While leading venture capital firms remained active participants,
Right.
we also saw, a significant increase in the involvement of other investor types,
I see.
kind of bringing the mix closer to what we observed in 2021 and 2022.
Okay.
So private equity funds continue to demonstrate, confidence in later stage growth investments.
Right.
Interestingly, family offices and corporate venture capital arms.
Significantly ramped up their activity.
Okay.
With their deal volumes growing by, approximately 1.8 times compared to 2023.
Oh, yeah.
Yeah. In fact, nearly half of the deals exceeding $100 million involved family offices or newer venture capital firms as lead or co-lead investors.
Wow.
So that indicates a welcome broadening of the funding sources available to these large-scale startups.
Right. So a lot more players kind of getting in on those big rounds.
Exactly.
Okay. Now, shifting to the capital flowing out, what about fundraising activity by the venture capital firms themselves?
Right.
The report indicates a decline in this area.
Yeah, so overall fundraising activity did experience a decline of about 35% in 2024,
Okay.
Reaching its lowest level since 2020 at $2.7 billion.
Okay.
This decrease can be partially attributed to the substantial amount of uninvested capital, often referred to as dry powder.
That many funds had accumulated in previous years,
Right.
leading to a more measured pace of deployment, in the recent period.
Okay.
However, what's particularly noteworthy is the increased prominence of maiden funds.
Okay.
So these are funds being raised by first-time fund managers.
Right.
These maiden funds accounted for nearly 1/3 of all the capital raised,
Right.
up from roughly 25% in 2023.
Okay.
So this suggests an influx of new fund managers, often with backgrounds as successful tech founders
Yes.
or experienced executives,
Right.
entering the ecosystem and focusing on specific, investment themes that they deeply understand.
Right. Yeah. Makes a lot of sense. So while less overall capital was raised by VCs,
Right.
A larger proportion of that went to these new, often specialized funds.
Exactly.
That's a pretty dynamic shift.
It is,
with potentially some interesting long-term implications.
for sure.
Okay, so finally, before we kind of jump into some of these sectors in a little bit more detail,
Yeah.
let's look at exits. How did investors realize returns on their investments in 2024?
Right. So exit activity remained, relatively stable overall in 2024,
Okay.
Showing a slight increase to $6.8 billion.
Okay.
However, the really significant development was the dramatic surge in public market exits,
Okay.
which increased substantially from about 55% to 76% of the total exit value.
Wow.
Yeah. And this was largely driven by a remarkable sevenfold increase in the value of exits via initial public offerings.
Wow.
IPOs.
Yeah. So the IPO market was really hot in 2024.
It really was. Yeah. It was fueled by factors such as, improved market liquidity,
Right.
a recovery in technology stock valuations, positive regulatory changes making IPOs, more attractive.
Right.
And probably a backlog of companies that had been kind of waiting for favorable conditions to go public.
Right. Yeah. Just kind of waiting in the wings for the right moment.
Exactly. And this robust IPO market, it's a really critical indicator
Yeah.
of a maturing ecosystem
Right.
because it provides a significant and visible pathway
Right.
for investors to achieve liquidity and generate returns.
Right. Yeah. That makes sense.
Huh?
Okay, so it sounds like we've got a pretty comprehensive overview of the Indian VC landscape in 2024.
Yeah, I think so.
To recap, we saw strong recovery in funding driven by solid economic fundamentals and regulatory support
Right.
alongside a vibrant public market.
Yep.
We observed some really interesting shifts in sector dominance, the rapid rise of quick commerce,
For sure.
continued growth in software and AI applications, and a renewed investor interest in more traditional industries.
Right.
The investor base diversified.
Yep.
And while overall VC fundraising declined,
Yeah.
maiden funds gained significant traction.
Yep.
And finally, a booming IPO market provided some substantial exit opportunities. It certainly seems like a year of significant recalibration and growth.
Absolutely.
Okay, so let's dive a little bit deeper into some of these dominant sectors.
Okay, that's good.
You mentioned the significant rebound in consumer tech.
Right.
With a fourfold increase in deals exceeding $100 million within this sector.
Yep.
What specific subsectors were really attracting those large-scale investments, and what made them so compelling?
Yeah. So I think what's particularly noteworthy is the breadth of consumer-facing subsectors that attracted these substantial investment.
Okay.
While B2C commerce, particularly the quick commerce platforms we discussed, certainly played a significant role.
Right.
We also saw substantial capital deployed into gaming companies, ed tech platforms focused on upskilling and personalized learning,
Okay.
and travel tech companies capitalizing on the resurgence of travel.
Right.
So this suggests that investors are looking beyond kind of traditional e-commerce,
Right.
and recognizing the significant growth potential in various digital first consumer experienes
Right.
that have demonstrated strong user engagement
Wow.
and the ability to scale.
Right. Yeah. So a lot of different flavors of consumer tech.
Exactly.
Well,
It's not just one thing.
Yeah. Yeah. And this apparent quote unquote flight to quality within B2C commerce.
Right.
The report mentions 4 key companies
Right.
capturing a significant portion of the funding in this space.
Right.
Could you shed some light on who these major players were?
Yeah.
And what factors made them so attractive to these large investments?
Yeah, absolutely. So the primary beneficiaries of this trend were companies like Zepto, Meesho, Lenskart, and Purple.
Okay.
And what set them apart was a combination of factors. They had already achieved significant scale
Okay.
in terms of user base and market reach.
Right.
They'd also demonstrated increasingly refined and proven business models
Okay.
with clearer pathways to profitability.
Right.
And crucially, investors were backing companies that had shown an ability to not just grow rapidly,
Right.
but also to build sustainable and economically viable businesses in the long run.
Right. Yeah. So not just growth at all costs.
Exactly.
But actual sustainable, profitable business.
Exactly.
Okay. The report also highlights this increasing interconnectedness between the growth in direct-to-consumer brands, DTC,
Right.
and the rise of quick commerce,
Right.
with quick commerce acting as kind of a major growth catalyst
Right.
for D2C. Could you elaborate on this dynamic?
Yeah, absolutely. So quick commerce platforms, they've essentially emerged as a vital new distribution and customer acquisition channel
Right.
for D2C brands.
Okay.
By offering incredibly rapid delivery times, they effectively overcome a key logistical challenge that many D2C brands face.
Right.
When trying to scale their operations
Yeah.
and reach a wider customer base efficiently.
Right.
The report even provides anecdotal evidence of D2C brands, seeing a substantial portion of their overall sales now originating through these quick commerce platforms.
Wow.
And in some cases, their overall revenue has seen significant multiples of growth, since partnering with them.
Wow.
So quick commerce, it isn't just about providing convenience to consumers,
Right.
it's also proving to be a powerful engine
Yeah.
for growth and expansion for the burgeoning D2C ecosystem in India.
Yeah. So it sounds like quick commerce is really kind of changing the game for a lot of these DTC brands.
It really is.
Yeah. Okay.
Yeah.
Shifting our focus to software and SaaS, while the overall growth was more measured, the increase in larger deals, those exceeding 50 million,
Right.
does suggest a maturing sector.
Right.
What specific areas within software and SaaS were particularly successful in capturing investor attention
Right.
and these larger funding rounds?
Yeah. So the report highlights, continued strong interest in areas that kind of underpin, digital transformation and efficiency.
Okay.
So, for example, development and testing tools, they remained attractive.
Okay.
Reflecting the ongoing demand for faster
Right.
and more reliable software creation.
Right.
Marketing technology also saw significant growth driven by the continued shift towards digital first marketing strategies and the expansion of e-commerce necessitating sophisticated marketing automation and analytics.
Right.
Additionally, the global scaling efforts of several Indian SaaS companies that are successfully expanding their presence in international markets.
Okay.
They're clearly resonating with investors who see the potential for these companies to become significant global players in their respective niches.
Yeah, that's really interesting. So kind of taking Indian software
Right.
global.
Exactly.
Okay, so within software and SaaS, the generative AI space, despite being relatively early stage in terms of overall investment volume,
Right.
Showed a notable 1.5 times growth.
Right.
The strategic focus in India seems to be on applications and platforms,
Right.
rather than on developing the foundational models themselves.
Right.
What are the potential kind of long-term advantages or disadvantages of this particular approach for India in the global AI landscape?
Yeah, it's a really good question. So focusing on applications and platforms, it allows India to really leverage its existing strengths in software engineering,
Right.
and its deep understanding of diverse industry verticals.
Right.
Building these foundational AI models, it requires immense capital investment in computational infrastructure and fundamental research.
Right.
Areas where other regions currently have a significant head start.
Right.
So by focusing on applications, Indian startups can more rapidly deploy, AI-powered solutions
Right.
to address specific needs within the Indian market and potentially in other, similar emerging markets,
Right.
without the need for those massive upfront investments.
Right. So it's kind of a more I guess we could call it a leapfrogging approach.
Exactly.
Yeah.
It allows for a more agile and capital efficient, participation in the AI revolution.
Right. Yeah. So it sounds like it does give India a path to kind of punch above its weight
Exactly.
in the AI space.
Right.
But there are some potential downsides.
Sure. I mean, a potential long-term consideration could be, a reliance on foundational models developed elsewhere,
Right.
which might limit, control over the underlying technology and potentially create dependencies.
Right. Yeah. So it's a strategic choice.
Oh, yeah.
It balances immediate opportunities
Right.
with potential future dependency.
Exactly. It's a trade-off.
Yeah.
Yeah.
Okay. Now let's delve into this resurgence of traditional sectors.
Okay.
Like BFSI and
Right.
consumer retail.
Right.
The funding growth in these areas was quite significant.
It was.
Beyond kind of the general reasons of market size and demand.
Right.
Were there specific types of innovations or business models within these sectors that were particularly attracting venture capital?
Absolutely. In the BFSI sector, we saw a significant focus on non-banking financial companies,
Right.
NBFCs,
Right.
that are leveraging technology to expand access to financial services for underserved populations, particularly in rural and semi-urban areas.
Okay.
Innovations in areas like digital lending, microfinance, and affordable housing finance
Okay.
were key drivers.
Okay.
Furthermore, there was growing investor interest in financial technologies technology solutions
Right.
aimed at enhancing efficiency and customer experience within traditional banking and insurance.
Right.
In the consumer retail sector, we observe strong activity in digitally native brands
Yeah.
that are effectively leveraging e-commerce and social media for customer acquisition and engagement. There was also, significant investment in food and beverage startups
Okay.
focused on innovative product offerings, sustainable practices, and efficient supply chain management,
Okay.
often, incorporating technology
Right.
for delivery and customer interaction.
Right.
So while the sectors themselves are traditional,
Right.
the investment is often being driven by innovative approaches,
Mm.
technological integration, and a focus on addressing evolving consumer needs.
Yeah, that makes sense. So kind of new wine in old bottles.
Exactly.
Exactly.
Yeah. Okay. So the report also points to a notable increase in deal volume within both BFSI and consumer retail.
All right.
Were there any particular segments within those broad categories that
Right.
experienced, a disproportionately high level of activity?
Yeah, definitely. So within BFSI, affordable housing finance companies
Okay.
and those focused on green financing solutions saw particularly strong deal activity.
This reflects, the government's continued emphasis on affordable housing
Right.
and the growing